I'm Kurt Shimmers. Every day, fortunes are gained and lost in the financial markets. News, trends, and even geopolitical events shape your financial landscape. Join me and my expert guests right now on Traders Nation. Welcome. You are tuned into Traders Nation. Thanks for making us a part of your day. Don and I have got a packed show, man. Jeff Small's with us today. He's president of Arbor Financial. Plus, he authored Turning Financial Planning Right Side Up. So we're going to be talking with him about housing. You know, the housing area has seen some recovery since the Great Recession. We're also going to dig a little bit deeper, and we're going to go into the DYI, the Lowe's and the Home Depots of the world. So we'll be talking with him and getting those numbers. Don and I also have payment processors and towers on our list. Some charts. We're going to be talking about what's going on there, guest stocks, and a whole lot more. Stay tuned right here. We'll be right back.
Traders Nation, if you promise not to tune out, we promise not to talk about you while you're gone. Traders Nation. Traders Nation. Get Pro Online DVD Trader today. Whether you're an experienced trader or just beginning, you'll improve your skills dramatically. Click on the Knowledge Center button to order your copy today. Traders Nation, delivering what you want when you want it. Traders Nation. Traders Nation. Live.
It's on the whole time.
Bringing traders coverage of the markets, solid trading strategies, potential hot stock movers, world-class guests, informative callers, and unsurpassed market chatter for traders to take all the way to the bank.
You guys got some great stuff coming out. I mean, the Great Recession.
Stay on top.
This is always changing. It's always fresh. Something new.
Stay tuned in. Traders Nation.
There's always something to look forward to.
Clearly, you can hear the difference. Traders Nation. It's the Traders Nation Network.
Hi, I'm Steve Forbes, and you're watching Traders Nation.
Yeah. Welcome back. You are tuned into Traders Nation. Thanks for staying with us. Hey, Don, real quick, I want to let everyone know where they can find you. Let's do that real quick. Social media, where can they find you, Don?
We're at Twitter, we're at Facebook, we're at Instagram, and it's Don McKelvey at the following.
Yeah. All right. So there, you can check it out. All those places right there on the screen, you can see what Don. Hey, all right. So Don, same thing here. Twitter, Facebook, all those places. Plus YouTube. We got the YouTube channel for Traders Nation. Yeah. All right. Bringing in the numbers, man. Talking about numbers.
As long as we keep it decent.
Sure, that's right.
Yeah.
Keep it on top shelf, Don.
That's right.
That's right. Respectable, Don. All right.
That's right.
Yeah, AMT, American Tower, currently trading at, look at it, $181.26, Don. All right. Remember that huge bullish engulfing channel, that chart candle that they had on that stock, the last edition of Traders Nation? Well, it did well. All right. It's up $5 since then. Don, your thoughts on AMT?
Well, 52-week highs are being registered here on AMT. Tower business. For those that don't understand or haven't been listening, this is the transmission of all the data worldwide. AMC is a world leader.
Yeah.
And technology is growing, so I sat on the conference call the other day and listened to the CEO and the CFO talk about the business. And look, this is a business hitting on all cylinders worldwide. And great dividend. This is a real estate investment trust. And the tower business is here, it's been here, and it's growing exponentially. And, of course, we've got 5G on the horizon with other technologies. So if you take a look overall at the business itself, it's a high barrier of entry. And so these companies are sitting there with decades, literally, of experience in the business. So we've got AMT with a great chart. We've got CCI, Crown Castle International. Yeah. And then, of course, we have SDAC.
Right. Roger that. Hey, let's go on to CCI. Currently, again, that's Crown Castle International. Charlie International is the phonics for that. I'm trading at $120.80 here today. 174,000 shares exchanging hands on this, Don. It's trading right there at the resistance at the top of that really tight channel. Bring your charts up. Let's bring it up for them, folks. Take a look at that. Look at that chart, man. I mean, that is a tight chart pattern, okay? It's this channel. And then certainly trading there right at the top of that. And that's CCI, Crown Castle International, trading here today. Don, your thoughts?
Well,
on
CCI is another one. This is a domestic company only.
Yeah.
No international operations, but this is another one that's poised for the future.
Right.
But these tower companies own many of the properties where their tower sits, and when they add incrementally hardware to the tower, their cost is next to nothing.
Right.
So for them to add business, they have a low cost to do that. Obviously, owning the property and the towers, and it's reflected in not only the growth of the business, the growth of the gross, but then again, of course, the net profit ekes out, and then of course these companies pay dividends. And Crown Castle is another one with a very handsome dividend. And by the way, this stock is almost back at its 52-week high.
Nice. Crown Castle International, CCI, once again, is the stock we're talking about here today. Charlie International is the Phonics. And Don, I think you mentioned SBAC. It's SBA Communications, currently trading at $182.96 so far here today. 169,000 shares exchange in hands. Average volume on that one is about 772. Oh, by the way, I want to mention also, too, so we're seeing a light volume here today. The market's down. It's like 270 points so far here today. But light volume, Don, in like a lot of these stocks here today. So everyone needs to really kind of keep an eye out for that. SBAC currently, it's doing some of this horizontal work, okay? If you bring your charts up on this, you'll see it's doing some horizontal work right here at its 21-day moving average. If it decides it's going to maybe give up a little bit, support's going to be around $180, okay, per share. Keep an eye on that. SBAC, Don, your thoughts?
Well, this is the Boca Raton-based company. Now, this company is very big in Central and South America, and obviously their international operations with both AMC and SBAC. As they grow, you'll see rapid growth internationally because in talking with their listing the other day on the AMC call, I was flabbergasted to find out that India, which obviously is a very growth-oriented country, they're only operating over there 2G, so they have a long way to go, as many of these South American companies grow. So
India 2G, Don.
Yeah, SBAC, international operations, South America, will grow very rapidly over the next 5 to 10 years. And this is another stock that's approaching. It's trading at around $184, 52-week high around 186.
Yeah.
And then the argument comes in, well, why should I be taking a close look at these stocks when they're approaching 52 weeks high?
Yeah.
Notice on a day like today when the markets sell off, these stocks are really not selling off. So you got to keep an eye on them.
You're absolutely right. And by the way, Don, these towers that we've been talking about for a while now, coming up to a year, Don, they continue to make 52-week highs. So the question here is, so it's trading its 52-week high, so what? Will it continue to make newer 52-week highs is the question, because they have been for the last year, Don. And I'm surprised to hear about India with the 2G, because, India, I wonder if it's, India, it's like much like China, right? Where you have like these really metropolitan areas, and then you have villages. There's like no in between in the outer lying areas of the countries, Don.
Well, as far as India goes, you have to just appreciate that a lot, not only India, but China as well.
Yeah.
You get outside the major metropolitan areas, for those of us that have traveled to some of these countries, and, there's really not a lot going on, and there's a lot of room for growth in a lot of these countries.
Sure.
And so India is a country that has a long way to go vis-a-vis telecommunications, cell phones. Just think about it.
Right.
They have to upgrade all these facilities, and naturally, when we go from 2G to 4, and of course we're looking here in the U.S., 5G is being rolled out. That's a lot more data that's going to be transmitted.
That's right. Yeah, it absolutely is. So, and this is where companies like SBAC come into play on a worldwide basis, because there's a lot of countries out there that are so far behind in the technology that at some point they're going to have to get their systems upgraded. All right, and maybe SBAC is poised to do that. Right. All right.
That's it. Great business.
Yeah, Yeah, a growth business for sure, internationally.
That's right.
Hey, Don, let's move on to payment processors before we run out of time here. Square, currently trading at $73.90 here today, 3.6 million shares exchanging hands. Rolled over, look at the chart on this. So some of these are rolling over, we're seeing some profit taking going on. In fact, all of our payment processors here today are rolling over. We're still going to report on them, so what? It's trading right below its 21-day moving average and right above its 200-day moving average. I like that. I like the fact that it's trading over its 200-day moving average. It's still very bullish, but it needs to hold at this point. Don, Square.
Well, Square is one of these innovation companies. They're great innovators, and here we have a stock that's got hit a little bit in some of these sell-offs over the past couple of months. But this is one that the viewers and listeners want to keep an eye on because this is great technology that's being developed, and this is another worldwide industry. And, of course, the payment stream. We talked about this, I guess, last week and for several shows now, where cash is not going to be accepted in a lot of facilities around the world. And so here comes the payment companies, and Square doing a lot of innovation. And there it is.
And I think we're seeing that with these newer payment companies because they're the tech payment companies. Square's one of them, PayPal's the other one. We'll get onto that. Oh, we won't, Don. We're out of time.
We're out of time.
We're out of time. Maybe on the other side we'll talk about that real quickly, okay? But coming up next, we got Jeff Small. He's with us. Since the Great Recession, housing really took a hit, probably one of the biggest hits ever, okay? But we're seeing a lot of building coming back into that. But the DYI'ers, Home Depots of the world, we're going to find out about that. Stay tuned. We'll be right back.
Traders Nation salutes America. Stay strong, stay proud, and stay in the green with us. Traders Nation live, bold, and packed for profit every weekday morning.
Traders Nation live, bold, and packed for profit. Sign up today for our weekly HTML newsletter and check out the Traders Nation store for products to enhance your stock trading day. Traders Nation, what you want, when you want it. Traders Nation.
Hey, Jeff Carlisi here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuning into Traders Nation. My pleasure to have back with us once again Jeff Small. He's president of Arbor Financial and author of Turning Financial Planning Right Side Up. Jeff, welcome back to Traders Nation. How are you today?
Hey, Kurt, it's great to be here. Thank you for having me.
Yeah, as always, Jeff, as always. Listen, so since the Great Recession, Jeff, there was a lot of new home builds that are going on. We're seeing that today. I drive around Phoenix, and I love it. I see a lot of wood going up, right? But the home improvement section, people doing home improvements in their own homes, generally travel over to Home Depot or Lowe's. Have these two retailers done well since the recovery?
Well, we saw consumer spending really fall off last quarter, Kurt, for a number of reasons. I think the stock market kind of put everybody in a downward mode for spending because we had a 20% correction in the last quarter of last year.
Right.
And, the Lowe's and Home Depot, they're not going to be impenetrable from that fact.
Right.
And so they underperformed. But what happened was Lowe's got rewarded when they underperformed on their numbers because their comp sales improved dramatically, and they're narrowing the gap between Lowe's and Home Depot's comp sales. And so Home Depot didn't get rewarded because they missed their market revenues, but by a hair. So what we have now is a declining macro data environment, and then we're going to start to see it affect the numbers and the bottom lines of these big companies like Home Depot.
It's interesting with the consumer spending, certainly, and I think some people are thinking twice, not even in the market with the correction of 20% in the market, but they're also are they thinking twice about putting any amount of a lot of money into doing home remodels and things of that nature. I mean, and if they're doing it, are they thinking, well, maybe instead of spending $3 a foot on some flooring, maybe we better go with the $270 or $250 or $2.25 foot. So maybe they're spending. It's a two-part question. So maybe they're spending it, but maybe a little bit less, or are they even spending it at all?
They're just not spending, and with the slowdown in real estate, Kurt, and there's not as many resales now because prices have peaked. People don't want to buy. Mm-hmm. It's really the flipping and the investing in real estate is dramatically declining because prices are at a peak, and it's getting harder and harder to find good properties to roll and make money off of. So that's going to hurt the revenue, the sales, the remodeling component, the home restoration side of Lowe's and Home Depot. Even though it's kind of a do-it-yourself place, it's a great place to go.
Yeah. What about home valuations then? So that all ties into it. Is that slowing also? Because certainly you're not going to put $12,000 kitchen in or a $20,000 kitchen in if you're not going to get it out over a 15, 20-year period of time.
Well, what we're seeing in the real estate side is that over $750,000 houses and up are really getting beaten up very badly. They sometimes have to be dropped 10 to 15% in price.
Sure.
Just to sell them. But the middle market, the average $200,000 to $400,000 house, we're still seeing a little bit of tail off there as well, but not as much as the bigger houses, and that's going to impact, of course, the amount of money people spend. Yeah.
So as far as the housing industry goes, the median, what are we looking at? 3-4% increase, if that, or maybe higher? Over time?
Well, there are some optimists out there, some prognosticators in real estate that think that the millennials are going to come in and fill the gap.
Okay.
I think the millennials would rather rent and stay in the major metropolitan areas.
Sure.
So I don't think the millennials are going to come in there and reboost the home market. But I think we're going to see home sales not even eclipse 5 million units this year. I think we're going to be 4.6 to 4.8 is my prediction.
Yeah.
And so what is that? A 3 to 4% decline.
Right. Okay. All right. So let's go back to Home Depot and Lowe's because it makes you wonder. Sometimes I look at Lowe's and I go through the parking lots and I see more people in Home Depot than I do see in Lowe's, but that's just in my area. That doesn't mean that's not scientific at all. But is there enough space? Is there enough business to support both of these, Lowe's and Home Depot? I mean, there's not like there's really a third, right? I mean, it's almost like Costco and Sam's Club, and that's it, right?
That's correct. And so, you certainly can't remodel your house from Amazon, that's for sure.
No, but people probably would try, though, Jeff, if they could.
Well, people use Amazon for the cheapest thing they can get because Amazon sells everything at bottom basement prices, but I never see Amazon competing with Lowe's and Home Depot. I think bricks will be clicks every time because people want to physically touch and feel what they're getting.
Sure.
And with Lowe's and Home Depot having so many different contractors on deck, for kitchens, for carpets, for tile, for appliances, everything else, the whole shebang, and even plumbing.
Sure.
So.
And you're absolutely right because people want to pick up that tile, don't they? I mean, you can buy socks. Socks are socks. You know what you're going to get. But with that tile, you got to look at the sheen, you got to look at the texture, you got to look at the lot color. So people want to go in and see that. They're not going to be able to get that kind of close-up visual on Amazon. So that's interesting.
Yeah, it's a tangible purchase, no doubt.
Yeah, okay. So what are investors looking at as far as these two, Home Depot and Lowe's, short-term and then maybe even long-term, Jeff?
Well, I think, the macro data for employment is really strong. Wages increases are still very strong. And so as long as that data looks good, I think you can expect moderate pricing point increases in the stock prices of these companies, and their revenue should pick up because home spending will pick up after March. Because there is a seasonal event here. We had a horrible winter, one of the worst winters on record, that obviously affected their numbers. And so we'll see spending pick up. So, if you're an investor, I don't see a lot of upside in Home Depot and Lowe's stock at this point.
Yeah.
I don't think the technical data, really the demand is going to be there unless their numbers really come about and they start, increasing at 3 to 4% quarter over quarter.
Yeah, and as far as long-term is concerned, same thing there?
It really is. It's the same thing because they're at the top end of their all-time stock prices.
Yeah.
I would favor Lowe's a little bit more than Home Depot at this stage of the cycle, and the reason for that is because Lowe's has significantly more room for improvement on their comp sales per store. They're catching up to Home Depot. Their CEO is from Home Depot, so I think he's going to reform things, and he's put things in place that will dramatically improve the potential for revenue extraction from their model.
All right, let's go on to housing in general. So is there anything else in housing that investors and traders should be looking at when it comes to maybe a long-term investments?
That's a funny question. Yeah. There is nothing I like to own in the housing market at this stage of the cycle.
Nice.
Absolutely. I might be wrong, Kurt, because for the best part of the credit sector of our economy is the home cycle, is the home mortgage business. There is no foreclosures are dropping. We're not going to see a huge correction in real estate. We might see a pricing point fall off of 10 to 15 points in market values, but we're not going to see a correction like we did post 2008 and 2009.
Okay, so you're staying out of the housing for the most part in general, right? I mean, completely out of it.
I really am. At this stage of the cycle, I prefer the FANG stocks. Okay. I made that call the end of December, and also banks.
Okay, and banks also. Okay, healthcare. Anything in that particular area that you may like or look at?
You know, healthcare is so politically sensitive at this stage, and, you know, we are living in a very divisive time politically.
Yeah.
The healthcare stocks are, again, at all-time highs, and with them peaking, I can't say that I would want to go long at this stage in a politically unstable environment that we have.
Is there anything other than healthcare that you may deem more politically as a hot potato, a sector in the domestically? Domestically,
That's so funny you're asking that.
Yeah, that we may want to just stay away from?
Well, I wouldn't stay away from pot stocks.
Okay.
I'm a contrarian there. I wouldn't. I think that, you know, I think we're going to see marijuana legal.
Okay.
And I think it's going to happen in the next 24 to 36 months. If the Congress goes blue, if we have a new administration, I think we're going to see marijuana legal.
Sure.
And that will be a ginormous boost for pot stocks. And I think that's going to be the new internet wave of potential appreciation in the marketplace. So that's going to be the new bastion of, you know, which companies are going to explode on the scene with great growth numbers. And of course, CGC is the perennial Canopy Growth from Canada.
Yeah.
That's the company the Constellation Brands gave $3 billion to own 40% of.
Sure.
So.
Yeah, that's a huge investment. It is. And you know what? And it is, I mean, who's going to backfill that market? I mean, people are poised to do that. We're out of time. Hey, Jeff, where can we find you? You got a website?
I do. Arbor-financial.com. Arbor like the tree, ARBOR. You can subscribe to my newsletter and see all my media appearances.
And head on over there today. Plus, pick up a copy of Turning Financial Planning Right Side Up. Jeff Small's here today with us. Jeff, as always, we appreciate your time.
Thank you, Kurt.
You bet. Have a great day. We'll be right back. Welcome back. You are tuned in to Traders Nation. Hey, Don. Jeff,
yes, sir.
Man, he's got great info. Head on over to his site today, folks. We'll put it up on the screen again for you. Hey, negative equity, Don?
Yeah, I wanted to jump in there, but I didn't want to interrupt you because I was reading a report this morning. You guys were talking about Lowe's and Home Depot and the slowdown in building and remodeling. Well, the negative equity increased in the fourth quarter of 2018 by 35,000 homes.
Wow.
Which means that, and obviously that reflects the slowdown because houses are not appreciating like they were, let's say, a year ago, 2 years ago.
Right.
So that falls right in that area you guys were discussing as far as the flipping and people not being able to sell at the price they think they can get for their home. So that whole market is kind of slowing a little bit, and that would be reflected, obviously, in Home Depot and Lowe's.
Yeah, Don, so, great point. I think that inventory's gone. You know, everyone was flipping homes after, you saw markets. Some markets saw a 50% drop in value, valuations. Phoenix was one of them. Las Vegas was another. In certain areas around the country. I think that inventory's gone. All right. Boy, we're out of time. We could probably do a whole nother hour on that, Don, for sure. All right, so we know where you can find Don at all the social media websites, social media, Twitter, Facebook, etc. Same here. Don, do you own anything we talked about today?
No.
All right.
No.
I don't either. And these are not buy or sell recommendations at all. All right. We do appreciate you tuning in to Traders Nation. You have a great day.